there are hundreds of millions of US dollars up for grabs. This is a very urgent video, so let's cut to the chase and get right to the point. In the wild world of cryptocurrencies, the last few weeks have been an emotional roller coaster for investors. Just when it appeared that the market was headed towards recovery, another crash rocked the scene, leaving many scratching their heads in disbelief. Yesterday's plunge sent shockwaves through the crypto community as prices tumbled once again. But what's been driving this wild ride? As you remember, the first ever cryptocurrency ETF, the Bitcoin ETF, was approved 2 months ago, opening the doors for investment in the cryptocurrency market. This daily infusion of hundreds of millions of dollars in money caused a frenzy that drove prices to all-time highs. It is crucial to note that Bitcoin, in particular, had a parabolic rise that broke through the $70,000 barrier. The prominence of Bitcoin as a major participant in the contemporary crypto, it is impossible to overstate how much the market run has affected other assets in the space. In particular, we have seen firsthand how closely Shiba Inu has followed in the footsteps of Bitcoin, as its fortunes have been ebb and flow in tandem with the king of cryptocurrencies. The role that Bitcoin plays is too important to overlooked, particularly in light of Shiba Inu's recent explosive rise, gaining over 200% in just 1 week, which shows how interconnected the cryptocurrency market is and how much the developments of Bitcoin have affected its counterparts. That being said, it raises a very good question: what happened in the last 24 hours that caused all of the cryptocurrency prices to plummet once more? After suffering the annoyance of frequent crashes, investors felt a flood of relief just as it appeared that the cryptocurrency market was finally recovering its breath. As recovery signals began to appear, hope sparked, but this optimism was fleeting despite first glimpses of hope. The market quickly returned to pandemonium, and the reason for this was yesterday's record-breaking $154 million withdrawal from the Bitcoin ETF in a single day. This large-scale withdrawal from ETFs set off a chain reaction that caused a substantial sell-off of Bitcoin. The effects were felt throughout the higher crypto space as prices fell once more. It's important to note that this isn't the first time such a scenario has played out. A similar event happened on March 1st, albeit on a smaller scale. Yesterday's withdrawal, however, dwarfed previous occurrences, amplifying the impact on Bitcoin's price trajectory. However, how long will the cryptocurrency market is still falling, so why did the flood of money into Bitcoin ETFs suddenly stop? Is this the end of the road for Bitcoin, or is there more to the story? Let's find out. A Twitter user issued a fairly accurate warning about the impending entry of Bitcoin into what they called the danger zone. The tweet, which was filled with statistical data, presented a dire image of past retracements and possible market downturns shortly before it was hobbled. It stated that one day, Bitcoin will formally enter the danger zone. Orange indicates the historical beginning and end of Bitcoin's preing retraces. In 2020, this retrace was minus 20% deep and started 14 days before the hailing. It lasted only a few days, but it preceded an over 150-day period of reaccumulation before Bitcoin broke out into its 2016 saw a parabolic uptrend. The previous retrace, which started 28 days before the hailing and was minus 40% deep, lasted for 8 weeks in total before Bitcoin broke out into a parabolic uptrend. As of last week, Bitcoin is about 29 days away from the hailing and has pulled back minus 11%. This concerning prediction suggests that Bitcoin may be on the verge of a significant downturn, echoing historical patterns seen before previous halving events. The stark statistics paint a sobering picture of potential retracements and prolonged periods of market turbulence. So, you might be thinking, well, that makes sense, since people expect the cryptocurrency market to drop even further and are selling their crypto assets in order to purchase them back at a lower price. However, it's not that easy. Not at all, even if it makes sense for investors to sell off their cryptocurrency holdings in order to profit from expected price declines and subsequently repurchase them at a reduced cost. Recent market behavior shows a bewildering paradox. Rather than seeing an increase in assets entering exchanges, we're seeing an outflow of assets. If people were genuinely looking to sell off their cryptocurrency holdings in anticipation of lower prices, we would expect to see a surge in cryptocurrency inflows on exchanges as they seek to execute their sell orders. However, the reality is quite the opposite, with significant outflows from cryptocurrency holdings. This bewildering trend calls into question the conventional wisdom of selling high and buying low. What's actually going on right now doesn't add up well. Exchanges are showing a reluctance to part with their assets, and some Shiba Inu whales are exhibiting the same perplexing behavior, as demonstrated by yesterday's incident in which an unidentified entity withdrew over 100 billion Shiba Inu tokens from Coinbase. The possible explanation for this contradictory market behavior could be found in a revealing tweet that highlights an interesting phenomenon. Bitcoin continues to flow from holders who hold 0 to 10 Bitcoin to now holding 10 to 100 Bitcoin. Proposes a tactical change for some of the whales who are actively building up cryptocurrency holdings in spite of the current market downturn. This intriguing approach goes against the conventional wisdom, with some whales doubling down on their investments and steadily increasing their positions rather than giving into fear and panic selling, and instead taking a forward-thinking approach to building larger holding bags. Even though the market is turbulent, a closer look reveals the reasoning behind this unusual strategy. By building up cash while assets are cheap, these whales are strategically putting themselves in position for possible future gains. They are aware of the historical precedent that follows Bitcoin. These whales are essentially playing the long game, anticipating a potential market frenzy rather than being discouraged by short-term fluctuations. They are taking advantage of the cyclical nature of the cryptocurrency market to their advantage, preparing for the inevitable upswing that frequently follows periods of consolidation and retracement. Having events where cryptocurrency prices have historically skyrocketed, retail investors may be influenced by market sentiment and short-term swings, while institutional participants in the cryptocurrency field have demonstrated expertise and foresight through their calculated accumulation of assets. While market volatility may cause panic among ordinary investors, institutional players frequently have a clearer view. This serves as a reminder that certain whales operate with a deeper understanding of market dynamics and position themselves strategically for long-term success. And a plan of action for navigating rough waters. But let's return our attention to Shiba Inu. Given the recent volatility in the market, many investors have been wondering what Shiba Inu's price will be after Bitcoin. The answer may surprise you. In the wake of the Bitcoin market, leading on-chain metrics and price prediction firm CoinCodex has provided a fairly optimistic outlook for Shiba Inu, estimating that it could rise by as much as 225%. This forecast implies that Shiba Inu has the potential to not only surpass its previous all-time high but also potentially reach new heights. After suffering through an extended period of instability and stagnation, breaking the 49 level for investors who have persevered and been true to Shiba Inu's cause could be reason for joy. Though it's a welcome development that the Shiba Inu may finally break its all-time high, a feat that has eluded the token for more than 2.5 years, it's crucial to approach such forecasts cautiously. While optimistic projections can engender excitement and confidence among investors, they should be understood as potential outcomes rather than guarantees. The cryptocurrency market is infamously volatile, and elements like market mood, legislative changes, and overall economic. The projection for Shiba Inu post-halving performance offers a glimmer of hope for investors who have been steadfast in their confidence in the token's long-term potential. But what are your thoughts on that? Comment below. Trends can all affect price changes. This brings this film to a conclusion. If you would like to view more, please click on one of the videos you see on the screen. I would be happy to hear your thoughts. In order to help me with the YouTube algorithm, if you liked the video, please like it and don't forget to leave a comment. You can also help spread the word about this story by sharing it with as many people as you can.